Hi, welcome to this video, Dave. It's all about Forex trading software. We're going to be looking at what you can expect from the best trading programs, how to stop the scams, and also going through some myths about software programs. Let's start with the scams first of all, and you've all seen them. They are the systems that come into your inbox promising you gains of like 100% per month, 1000% per year. And even better, you're not even going to have any drawdown or hardly any drawdown. Maybe 5 or 10% dips from your peak equity. They cost a few $100s. They come with irrefutable proof, real time performance, so they claim, and they all lose money. And it should be pretty obvious to traders that if you are making 100% per annum, let's say with 5% drawdown, you would be up there with the best traders in the world. Okay. But yet you're supposed to believe that, for $100 or $200, you're going to get this sort of performance. Well, you won't, is the honest answer. The copy is very convincing for these programs. You've normally got, you Photoshop bank statements on how much the vendor has made, some fake video testimonials, and then an endless stream of what is supposed to be real live account trading, which isn't. I mean, the way the system has been put together is it's being done in hindsight. All that has happened is you get past data and the vendor will then just bend the system and its rules until it actually makes a profit on past data. So it's what we call heavily curve fitted. So it's bent to fit the data. When it's traded in real time, of course, it will totally collapse. Now, it's one of those industries that's become huge because people just believe that computers actually make huge gains in financial markets. Now, moving away from the junk robot packages, a lot of people say to me, well, what about these hedge funds and banks, all the money they're making with their computer software programs? And the answer is what money? I mean, hedge funds, the hedge fund index, if you take it from 1998 to today, if you'd invested in T-bills, you'd have made more money. And that's, just a proven fact. I mean, people believe the hedge fund myth because there's been the occasional good one, like the quantum fund with George Soros and Jimmy Rogers. But most of these funds have a dire performance. And the same goes for bank managed funds, The computer systems they use, they might sound, really high tech or whatever. But as I've said before, they're designed to trade frequently to generate commission income. They're not designed to make, clients profits. For banks and hedge funds, it's all about turning over commission. They don't have performances that even beats, the index, the S&P 500. So, forget all this nonsense that, software packages, are making banks billions in trading profits. It's billions in trading commissions. Now, if you think about it, software, and I'm going to come to what you expect from the best programs in a moment, but software, it can get more and more advanced. But it doesn't actually help in the trading arena because simple systems will always beat complicated ones. If you have a complicated system, it'll have too many elements to break and will fail in real-time trading. And if you look at the Forex market itself, there is no hidden code. It's not scientific. It's basically humans and unpredictable. So at best, you're playing the odds, okay? So that's where a simple system comes in. And there are simple systems that, do make money and they can be computerized. I mean, one we love is the 4-week rule by Richard Donchian. It's totally free. You can computerize that yourself and make a great long-term income with it. Now, you will have periods of drawdown. My point with the best Forex trading systems is they'll normally make 30% plus. Some will make a bit more. And you'll probably have about 6 months of drawdown at some point. And your equity will draw down by, a reasonable amount. If it's, trading to make 30%, you could expect 15% drawdown, I think. If you're trading to make 50 or 100%, you're going to get drawdown of 50% at some point. So it's a long-term game. And, if you have a software program, you're disciplined, you take months on end of losses while you wait for profits, then this sort of trading will suit you. But one thing I would say is most traders cannot follow mechanical trading systems. They like to be a bit more involved in the market action. So if you're that way inclined, then you should learn a simple system yourself, and basically trade with you in control. Okay, and that's not such a bad way to be, because all the best traders in the world tend to be traders who think they might use software as backup or whatever, but they will actually make their own trading decisions. In the Forex markets, the human brain can adapt, it can think. A computer can't do that, so that's a huge advantage. So my own view is I would always say that if you're a new trader, don't believe in the get rich quick, too good to be true route. It's not true. Learn a simple Forex trading, trade for yourself, be in control, and then you make yourself a nice income in your spare time. But really, software trading is only for the disciplined long-term trader who can take drawdown, and most traders can't do that. So my advice would be learn Forex trading yourself, and good luck, and I'll speak to you soon. Take care.